The bottom might not be in, but a report from Arcane Research outlines how the crypto market could perform in the short, medium, and long term. As November begins, analysts are busy dissecting the major market movements that occurred in October. While Bitcoin BTC $20,478 stayed relatively unchanged with only 5.89% growth in October, Arcane Research senior analyst Vettel Lund mapped out the direction the market might take in the next few months. October, a reference to Bitcoin's bullish historical performance in the month of October, was a common theme across many threads on crypto Twitter, and according to Lund, it appears to have happened. Data shows BTC and exchange tokens outperformed the large caps index up until October 26. Elon Musk's Twitter takeover helped push the large caps index above Bitcoin with a staggering 20% monthly gain. Dogecoin Doge 14 cents helped cement the large cap strength by producing a 144% gain in the last 7 days. October's Bitcoin spot market was driven by increased volume and lower volatility, while benefiting from a short squeeze that briefly invigorated the market. According to Lund, the last week of October saw the largest short liquidation volume in crypto since July 26, 2021. While this activity helped push Bitcoin up by 6%, Ether ETH $1,580 and Binance Coin BNB $324 saw more substantial gains at 18% and 19% respectively. The short squeeze helped give an overall boost, but Lund concluded that the momentum did not create a substantial change in BTC price. BTC spot volume is up 46% in the last 7 days, and the 30-day volatility index is at a 2-year low. Furthermore, the 7-day volatility index is sitting at 2.2%, whereas the yearly average is 3%. When comparing volatility to a previous short squeeze to the recent short squeeze, Lund said, the July 26th squeeze saw a daily high-low variation of 15% as markets hastily moved up, whereas the October 25th and October 26th moves saw daily high-low variations of 5% and 6%, respectively. Further, momentum has stopped, indicating that traders should brace for longer consolidation. While Bitcoin is priced attractively, the best approach to this market is to dollar-cost average in the short term rather than using leverage, according to Lund. Bitcoin has been experiencing uniquely low volatility and follows the U.S. equities market closely, so it is important to track Q3 earnings reports. Fed policy will continue to dictate Bitcoin price. Federal Reserve Chairman Jerome Powell is set to speak after the November 2nd Federal Open Market Committee, FOMC, regarding U.S. monetary policy, inflation, and the upcoming rate hike. According to Lund, there are 2 scenarios to watch for. Scenario 1, Jerome Powell remains astute in combating inflation and prepares the market for further hikes. This is, in my opinion, the most plausible scenario. In this environment, I expect correlations between BTC and other asset classes to remain elevated and the now 4.5-month-long trading range to hold firm, with dampened activity, leading to a longer-lasting opportune environment to stack sats. Scenario 2, Jerome Powell provides subtle pivot hints. In this scenario, I see the correlated market environment softening. Last week, we saw how unique structural crypto-related market activity caused correlations to decline through a substantial short squeeze. Pivot anticipations will lead to similar reactions and revitalize BTC's digital gold narrative. Under the second scenario, some analysts believe that crypto could begin to decouple from U.S. equities. This reaction could mirror the crypto market's reaction in mid-2020 that pushed the Bitcoin price over $20,000. What to expect in the long term? In the longer term, Lund predicts that the adoption of Bitcoin and digital assets will continue to be an emerging trend. Pointing to a Fidelity survey that showed an increase in interest from institutional markets in 2022, Lund remains bullish on BTC at the current price. Even though Bitcoin is seeing less on-chain transactions, increased participation from a clearer regulatory framework is possible in the long term. A clearer framework could eventually emerge if the U.S. electorate starts to consider crypto policy when voting. Bitcoin's muted growth, its correlation to equities, and a sticky downtrend for nearly a year remains a threat, but many analysts are confident that Bitcoin's current price is undervalued.